Portugal's president rules out a snap election, investors breathe a huge sigh of relief and the 10-year yield tumbles. But the country's political and economic troubles are far from over. Let's get out now to Peter Shafrick. He's Head of European Rate Strategy at RBC Capital Markets. Well, Peter, the 10-year yield today down almost 45 basis points, biggest one-day fall since October the 5th last year. How much of that is just down to short-term positioning? All of it?
Well, I wouldn't say short positioning because, quite frankly, let's look at the face of it. The market is not very active in Portuguese bonds anymore, certainly since they dropped out of many indices. But one of the things is clear. What had happened over the past couple of days is that we priced in quite a bit of negative news. We priced in quite a bit of anxiety. What might happen with Portugal if indeed the government tumbles? But so it didn't, and hence I think we're correcting bits of that.
So does this have more to go? As you say, the government hasn't collapsed, it seems to be in place, so do we head lower on the yield still?
Well, we could be, but keep in mind we came from around about 550, so we're still quite a bit away from that in the 10 years, that is. And going back to that level seems a bit exaggerated given that quite a lot of stuff happened in the meantime. And certainly one of the crucial things we must not forget is that the current bailout program of Portugal runs out early 2014, and it's still very, very unclear what happens afterwards.
Well, you mentioned that bailout programme, and just a few minutes ago the Portuguese Prime Minister was saying that he wants to complete that programme as planned. But the way how shaky things look, is that the stuff of fantasy?
Well, the problem is that even if they continue the current program, and even if they see it to the end, for me, it still doesn't mean that they can stand on their own two feet. So the problem is clearly what comes after the program expires, whether they reach that goal or not. And for me, the question can only be a second one. And that has to be negotiated. And once it's negotiated, we have to very carefully look at what's the outcome of that.
So how's that going to work? Is Portugal going to limp along until the middle of next year and then go straight into a second bailout, or will a second bailout precede it?
I think what we'll get is probably towards the end of this year, we'll already get the shapes of what the second bailout program is going to be like. So it won't be that we reach the end of the first bailout and the week before it's still unclear what happens afterwards. That's not going to happen. I'm fairly confident that by the end of this year, we will know what comes after the first one expires.
Okay, and just to finish up, there was a note from Goldman Sachs over the weekend that said, in their estimations, fair value for the 10-year spread was about 400 to 420 basis points, 400 to 420 basis points. Does that sound about right to you?
Well, I certainly wouldn't argue with that because we see quite a lot of potential in most of the spread products at this stage, and provided that everything I just said, that Portugal will get a second bailout program holds, and crucially that's going to be without a PSI, private sector involvement, there's definitely value in it, definitely.
Okay, Peter, thanks very much. That was Peter Shafrick at RBC Capital Markets. Now, 3 European major companies reporting a triple whammy of positive results today. Philips is up 3.7% after Q2 earnings beat forecasts. The same story for UBS, which reported earlier than expected, its shares rising almost 4%. And Julius Baer also beat the street, first half profits rising in the back of higher margins and client activity, its shares up more than 5%. On the losers list though, shares in Mobistar plunging 29% after the Belgian telecoms operator slashed its forecast and suspended its dividend. The telecom sector is down 1/3% and is the biggest drag on the FTSE Euro First 300 today. That's all from us for now, but tune in to Market Pulse every weekday at 12 BST. I'm Jamie McGeever, this is Reuters.